Okay, good afternoon, everybody. Ready to play pinball. And while we're waiting for people to filter in, I'm going to just kind of absently look around and see what's going on. Also, kind of update you guys on what happened. And let's start with that. And for that, we'll look at this first. So, this is the depth view feature on options depth. And it's the same data that you see on the position chart, the bar charts, only numerically. My mind works pretty good with numbers. So, a couple things I want to point out. Early ish in the day, we saw a big position come in, a big iron condor. And if you guys want to speak, just like let me know, say something, and I'll put you on the stage. This is the stage up here. So a big iron condor come in at 10 at 64.10.05, and there was also some selling further lower, stuff that I sold in the morning. And the 90s were there in the morning. The 6490s were there in the morning. That was kind of part of the chop zone, and so were the 80s. More was added up here, sold call spreads, and more was added a little closer, like at 80, I think at 80, 85. I don't remember exactly. Long story short, that had the effect of compressing the range, and I don't know how well you can see the numbers here. It's 6460, 6455, 6415. The numbers locally, by that I mean near the money, would be switching, changing positive, negative, long, short. Why? Because customers like you and me and hedge funds more likely are buying and selling enough to make this move, and that allows for movement. Now, that's not to imply that there's no real money buying on the planet and that everything is based on options. But options are going to be the guardrail. Within a certain tolerance, this is where we're going to go. I, I think it's been my experience. Okay, and so current situation 64.45 market makers long. And then later on the day, the 35s came in, was sold, large size, 12,000. It was only a 5 wide, but still large size. I don't know if the 45s came in, 64.45s came in big tranches or more like moderate tranches and they drifted in, but that's the current situation. And killing time until it's officially time to start pinball. There we go. Okay. So this is the current setup. We're right at 50. And so, of course, the first thing I want to ask everybody is before we go through the analysis, if you've done your own or on a hunch, on a WTF, are we closing above or below 50? Type it in the chat on Twitter or on YouTube or over here on StreamYard. And so over under 50 is a first decision point, and then we go from there. Now, granted, there's a half hour left. Well, it's only 3:29. Wow. Below 48, he says. Okay, we got one. We got one below. We'll look more closely. to see. Oh, we got another one over here below. Okay, I got two belows. I got two belows. Do I have any aboves? Okay, no aboves. Ah, we have an above. Now we have two aboves. The optimists are coming in. And just, okay, it's 3:30, so I'm going to start again just saying, hey, we're playing pinball and we're in the middle of talking about do we close above or below 6450? It seems to be a split vote. We need some swing states to come in. If anybody wants to type in,
I'd say we close above.
if anybody wants to type in why they think we're going above and below, just a few words. Now I'm going to change the look of this. I want you guys to see this. Oh, we have a 45. Wow, a killer. Now this is position number. Now, one thing is this could distort your eye because there's 10,000 down here that are far out of the money that don't really matter. Well, these matter, the 35s. These don't matter. And there's kind of the other side of that iron condor plus friends up here, and they're pretty far out of the money. They don't matter. So, but from a position size, they're big. However, if we change it to a gamma, the market maker's required hedging response should we move to balance their deltas, which is what the name of the game is. Suddenly, that big bar up at 64.90 is doesn't matter. Suddenly, the big bars down here, they don't matter. Usually, market and close is a buy under all-time high, so I'm thinking we pump in the last 10 minutes and close at the gamma trough around 57.50 area. Wow. We'll take a look at that. Interesting speculation. Well reasoned. Okay, we're gonna leave this view for now. And I'm gonna take a look at the old. Okay, right away my eye goes to the fact that we have this whole white area, which is like not much information. In other words, not much required from the market makers here. A little buying, selling, and kind of 55-ish area looks potentially magnetic. Hey, your area looks magnetic. Did you look at the heat map? And we have this dark blue is going to get hard to get under. This is going to get hard to get under. Now let's look at the charm version. And so notice this. Notice that it can kind of slip out here at 64.50 into the great wide open. So it's if we're under the yellow suppressive charm, it kind of keeps us under. And the blue is supportive. So here's one area, all these short puts. So if we get buried under them, then they act as a ceiling. Positive gamma above us is suppressive. If we get right above them, it becomes supportive. So this whole picture flips. So with that in mind, let's look at this again. We seem to be stuck like Chuck right here. All right, now let's mess around and go to an option chain. This is a trade I never put in. I was looking at before. Or maybe I put it in and never filled. I see. I was trying to get it for 35 cents before. It's a buck 10, a buck 20. See, that's what happens when I play too cheap for 10 cents. All right. Well, let me hear this one. Volatility. For me, well, I thought you became the owl. The Globex lower line with a massive positive gamma cluster, 64.47.5 and a blow. So I think we get a bounce near the negative gamma cluster that can push us. Okay, so let me translate that for. So he's talking about the massive positive gamma club cluster down here. 45 is where the short, where the market maker long customer short gamma is. And so 47 and a half is a reasonable number. Like we go down there, then the mean reverting flows push it back up. And that happens to align with, so you're doing a multi-level analysis. That happens to align with whatever local low he was looking at. There's a low here that was today down here in the pre-market around 45-ish, and then in the real-time trading hours, the low was around 50-ish. So he's lining his gamma up with his TA and his whatever depth of book or whatever else, and saying that what, we should go up. How far up is another story. Okay, now for the under 45, under 50 crowd, make your case. You're allowed to change your mind. You just have to say why you changed your mind. And since it's a little late in the game to figure out how to trade this, we'll start with that. So your buck 45, I don't want to pay that to play pinball. That's too much for the price of admission. Buck 35 here too. So the cheapie that I tried to buy for 35 cents, so I could have bought easy for 50 cents. I showed them. I saved 10 bucks and missed the trade. So to even think about making it worthwhile, and these out of the money ones don't cost anything, so that's not going to help. So this, or a variation of this, would be your trade. Now, it's only a 5 wide, so it doesn't have a lot of tolerance for error. Now, and even if you wanted to bring it up here, you're not getting anything for this out of the money 64.70. So that kind of sucks. That's a technical term. Now, put call parity, we shouldn't get anything different, but put call parity is a myth. It's a theoretical construct, not a reality. So basically, what you're almost doing here is buying, in either of them cases, is buying a debit spread a little cheaper, in essence. Anybody out there on Twitter, on YouTube? I don't really see any. Let me go here again for a second. So where are we? Oh, Rainy Days. You know the Jimi Hendrix song "Rainy Day, Dream Away" from the Electric Ladyland album? It's a good song. I don't know how to put a soundtrack on, so otherwise I would. Ah, he knows it. Look at this. Good guitar part on that song too, but I mean Hendrix is gonna get a good guitar part anyway. So do we like this variation with a 55 mid, or do we like this variation with a 50 mid? Since we don't want to go 10 wide, that's going to matter. So are we going over 45? That's the question that we have to decide in doing this. Because this 50 either goes in the money and we get paid, or we're paying $3 for something that's going to be out of the money and it's not worth anything. Now the chart looks kind of crappy. If we guys do it from all right, here's my morning TV string. Reaction zone also happens to be Friday's close, so if you're playing TA style, we end up at the same spot. Here we are at the pivot. And the reason those 45s aren't on the on the TV string is they weren't there in the morning. That was a trade that came in later in the day. And I just didn't update it. I'm guessing let's take a look at our favorite measures of volatility. A little bit of tail being bought at the end of the day here, far out of the money. A little bit of one stand deviation out of the money. But here's a 9-day vol. So that takes us past all the events of the week and NVIDIA and all that. VVIX tells us nobody cares. The demand for volatility in general just isn't there. And here's regular VIX. Little pop, little pop. So that's kind of the weakness we're seeing is related to that. Here's SPX.
Hey Doc, can we look at Periscope and see if it gives any clues?
I'm sorry, somebody's talking to me on the open mic. Go ahead, say again.
Unusual, well, Periscope, does it give any hints?
Let's take a look. Okay, good idea. So I also have
Thank
Unusual Whales Periscope, which shows the same data, give or take, I think. Uh, just a different presentation that might be easier on the eye. And we're at 49 here. Here was the zero DTE straddle at the open, and today was a sell the straddle, sell the wings day. So right now this is on gamma. So 6450 kind of it just depends, is this decay down if we're under it, or decay up if we're over it? That's sort of the question. Let's change it to position size. Now we see the positions here are nothing. Now I don't believe that. I'm sorry, Unusual Whales. I think I call BS. Wait, is this there we oh again it's distorted because of let's zoom in. It's distorted because of this big position up here. Let's put it on gamma so we get a little better view. And right now we're kind of stuck right here at the 50. Stuck right here at the 50. Let's see what's actually there. Not a lot there. 45 is still hanging tough. So now if the 45 hangs tough, then 45, 50, 55 kind of makes sense, right? And your main risk with that is over under here.
you. Doc, you're expecting a bounce off of 45.
Now the chart looks ugly. The chart looks ugly. And as we have discussed, volatility increasing kind of widens the distribution. But I don't think it's going to widen it that much. If I could get this a little cheaper, I would do it. But buck 75, just a little too pricey for my nerves. And we still have the potential for that. After all, we're 149. All we need is to poke our heads above the 150 and the setup changes a little. Who else is out there on Twitter or YouTube? I don't see any Twitter comments. I have to set up a poll beforehand. Oh, and while we're at it, we were looking around for what tomorrow looks like, and there's positive gamma all the way down here, but that's too far away to get any premium.
Is tomorrow expiration?
Tomorrow's expiration is here. In the
No, but is tomorrow's expiration? Fixed expiration.
no, well, a small one just for the. Okay, Sam. I'll try not to make you drink out of a fire hose. So actually, Wednesday is the expiration. Always Friday is the Tuesday is the last day to trade it. But if we look real quick over here at the VIX expiration, just sort by open interest. 6,000, 4,000, very small. 6,000, probably somebody bought or sold some kind of straddle, whatever. But if you look at the values here, 4 cents, 12 cents, 17 cents. So if you think of that in dollars terms, market makers have to buy a few VX future contracts or sell them. So there's not enough demand there to make it do anything versus 75,000 puts over here, but the real action is in the calls. We have 250,000 calls at 15.5, basically at the money. So you have 750,000 calls between 15.5 and 17. Yeah, another 39,000 came in today, almost 40,000 at 18. You have another bunch that came in at 15. Now we know that these are likely spreads of some sort, 1x2s or flies or debit spreads. There might be a few stragglers that bought here's the calls. Might be a few stragglers that bought the 20s. I don't even see. Oh, near the money, that's why. There you go. Let's go with open interest first. That gives a little better picture. Even on that, usually they've been buying the 20s. 24, I'm guessing that's sold. Here's 7,022. These are calls. This is bid by open interest. If we look at it just by strike, flip it the other way so we can see them, what looks like spreads. 22, 24 and a half, maybe 1x2, buy one, sell two. 20,000 is already kind of loaded up. Some just slightly out of the money. On the put side, let's first sort it by strike. Now, are these buyers or sellers? We don't know. Options depth, we'll have that data for us a little later. And so, for Sam's sake, and a lot of people who are out there kind of watching that are a little unsure what we're looking at or how to think about this, the short version, simple Reader's Digest version, I don't know if you guys even know what Reader's Digest is anymore. The condensed version is customer sells a put or a call, market makers have to buy it, the long gamma or a positive gamma. They own the gamma that was sold. Gamma is a rated change of delta. We don't have to even worry about that. for the sake of this discussion, these deltas were sold, so market makers own them. That sounded like calls closing to me. Short calls I sold before. Um, and so the way they hedge it, and again, we're not going to get too in the weeds, as it approaches the strike that market makers are long, customers are short, market makers are long here, so it's positive delta. So as it approaches here, we bounce. They hedge opposite the direction of the move. You with me, Sam? They hedge opposite direction of the move. So they hedge against this move. We go down, they sell, and they buy. But we move away, they sell. However, this isn't the only position on the planet, and we have this overhead position where market makers are short, but it's a small number of market makers are short this. They hedge in the direction of the move. So as it bounces up off of the 45, they kind of buy in this direction, the 50, until we kind of stall out. Then they start selling. Kind of think of it, if you bought a call and we went up, your call would be worth more. Worth more. Market makers are hedging in the direction of the value of your long call. But when we stall, suddenly a long call loses value, especially if it's a zero DTE call you bought 10 minutes ago. It starts to lose value. Then market makers are selling. So we have that flip point. So right now, this is a flip point. Saturday evening post. So something's closing. Is that which account is that in? I don't know. Let's take a peek real quick. What closed? Filled orders. To close, to close, to close, to close. Calls. Okay. So call spreads are closing. That's what this is. Good. So I just made some money here. Market on close roughly 1.15 billion to sell. Just sold some puts that I had in all day waiting to sell. There's 45. I'm telling you, Mr. Wong is no joke. And remember, we also said, we meaning me, only moments ago, well, we said a few things. One of them was that the distribution widens out as IV pops. And so we kind of undercut here. Let's see what the position size is. It's a pretty chunky position. Kind of would expect to go back over. What happened to the chunky position? It's gone. It was 4,000. Whatever. Oh, yeah, it's still there. 4,000 puts. According to this, it's still there if they didn't close. So your lotto fly. We didn't even look at the lotto fly. So now the 45 becomes a lotto fly for 20 cents. I'll give him 25 cents. Let's make sure I get it. Looks like I just threw my money. Oh, it's 3:59. I thought there was more time. Yeah, I just threw my money away. Okay. Does anybody remember what the... Okay, so this is... We were looking at this one initially, and that one wouldn't have paid either. So the out of the money one, which we didn't really look at the price, was probably cheaper, less than $1, would have been your payoff. and we closed at 39. Wow. Tracker down 0.5%. Yeah. Nice close, Mr. Wong. Yes, good job. Good job. Did we exceed the expected move? What was the expected move in the morning? 40. We might have exceeded the expected move. And if we did, we can expect to see the icy whale showing up right around 64.10-ish, 15-ish. I don't see him yet. Oh, I was asking for names of my Iron Condor, and somebody helped me, and the tentative working hypothesis of a name is Dig. Digg. Doc's Iron Gamma Goat, because I own goats. So I don't know if he's there. I don't know if we can see the expected move either. I think it was around 20 something ish, but last night he goes by the night before. I think it was probably 25, 30. I think we might have just missed it. And usually he waits a day. He goes for 2 days in a row. But that doesn't mean. So, I mean, I'm not a tight iron condor guy, although I play one on TV. That said, I'm not sure if I really like this. I prefer to be below a round number to begin with. 95, 85. And that 80 looked good. Now, I don't mind this so much. Now let's double check it with what's in the change for tomorrow. So really, the call selling is up here. Really not much other than we have like at the money selling here. And we have 6,400, a little something, a thousands, little something. Let's look at one more thing and then we'll decide we want to put the trade in. Or I'll decide if I want to put the trade in. You could do what you want. So this is tomorrow. And you see, okay, where are we? That's that. This is right here is the at the money straddle that looks like it was sold, give or take at the money. So sticky zone all in here. Free to move up here. Like to get over 90 again. I'd like to get under 6,400. So let's clear it out. Let's do it this way. So we'd like to get under 6,400. That looks pretty good, even at 95. That looks pretty good. Usually I go wider than 10 wide. That's 55 cents. On top, 80, 90, a buck 15, a buck 20. See, I'm not crazy about being there. That's a buck. Yeah, and I only want 95 cents, and the crooks don't want to give it to me. 55 cents for that seems like a good deal. Whoops. So let's do it one piece at a time. A lot of times you get a better fill one piece at a time. Do one for 55 and one for 50. See if we can get a 50-cent piece here. That's 45. That's all right. I'll take it. I'm not so worried about same premium. Come on, bro. All right. You're gonna make me do it. No, I'm not gonna do it because I don't think that's wise. I'll take 40 cents. I can leg in and add around it. These are 85 on top and 95 on bottom with an expected move of 20. So they're more or less double the expected move. Let's see if okay. Oh, we have plenty of time. This is all sticky, trying to get over this. But if you do, just word to the wise, there's nothing up here. To the downside below 6,400, we have this, but from where we are now, here, there's kind of a path down. Now, another way I like to think about this and see if there's anything there. So 63.40, that's pretty far away. That's going to hold for tomorrow. So if it's going to hold for tomorrow, then we certainly won't be there on Wednesday. At least tomorrow, this gives it time to decay. But there's no juice here. I sold some of of these. That was the bell you heard ringing before, but they were wider. And I'm not going to ask people. I mean, you can do what you want. A lot of people don't like to sell 20 wide for 40 cents a few days out. I don't mind. And that's it. So tonight we're having a big fire. We have 6 months worth of goat shed cleaning outings, hay and whatever that was in a pile that's being burned along with scrap wood that's being burned from the projects. Of course, we're digging and doing another project, digging some trenches for various reasons. So while the excavator is here, we meaning not me, we meaning I'm paying for it and somebody else is doing it. Um, we meaning not me dug a big hole like 6, 8 feet down, and all the hay and dung and wood is going in there, and we're having a goat hay burning party tonight and wood, scrap wood burning party tonight. So I'll post pictures in case anyone's interested. And that's it. Let's take a last look at a normal chart, so to speak.
Nice rain today, like we call for the most part.
Oh, and let me mention that our buddy Bad Hombre is a bad hombre. He caught a couple great scalps at the Open, then did what a pro trader does. Walked away because there was no good setup, waited past the dead lunch hour, then came back and grabbed a few scalps later in the day. And we're trying to get a trading room. I mean, he's doing a little bit of trading room thing with e-minis now, but that'll be set up a little tighter. Hopefully, what, within a week? Less?
Less, yeah, I'd say maybe by Wednesday, Thursday at the latest.
Wednesday, Thursday. Midweek rollout Friday special.
That's right. Love it, Doc. See you in the morning.
All right, see ya. Okay, and that's it. Our private chat, I didn't see this. Scalping ES and Q. I think he scalps both. And what I know he scalps ES. I'm not sure about NQ. I got another guy that does NQ that may be joining us a little bit. That guy, you may have seen him in the morning. He comes on once in a while, Vol Trader. He's used to be a market maker in Europe, but on the currency and FX and commodities desk, I think. I think they didn't quite have specialists the way we do, at least from what I can understand from his storytelling. Yeah, he's going to be sharing his screen as he scalps, yes. He'll be sharing his screen. We're going to have the whole screen share, scalping, all that. And I'll be jumping in just to keep you guys Gamma honest. He's got a target. I'm going to make sure that it's Gamma. Of course, he's going to listen or not. That's up to him. But, oh, great, we got good. And so whatever we do scalp-wise, I'm going to try to make sure at least it's Gamma kosher. And a lot of the scalps end up being that way. The levels, we look for levels that coincide. I know Mental Q was having some technical problems today. Let's see if they're fixed. Apparently not. I guess not yet. That's surprising. Usually they're right on that. Well, it's not the one I wanted to see. That's the one I wanted to see. McGraw's Substack. That's the one I wanted to see. Because this has a TV string I give to people on Substack. But I haven't done one for tomorrow yet. What do I have here for fun? Mean reversion down to 64.34, but that's today, not tomorrow. Let's see if it's working. Nope, not working. That's unlike them to have a glitch that lasts this long. Expected move by time frame. Oh, it's a 3-minute time frame. Can't see anything on 3-minute time frame. Here's the expected move by time frame. But if we're thinking about tomorrow, we want to maybe look at a 65-minute time frame or a 30-minute time frame. Yeah, usually a 30-minute time frame at the end of the day. Me and my brother experimented with this years ago. I mean, this is your safe levels, but you're not going to get any premium there. A 30-minute might be a little tight. Okay, waiting for it to update here. Come on. Well, I can't get it. I don't know if this is updated or not. I don't know if it's, I think this stops at the end of the day. So, okay, that's it for now. 416, markets closed. Yes, you'll be able to share a screen for scalps. Custom levels work. Yeah, I was the one that told him to use the custom levels. He was like, is it working for you? I say, no, but the custom levels, if you copy and paste the string and put it in, it'll work. Just like I copy and paste my string and put it in my indicator. It's basically the same sort of thing. I mean, ChatGPT wrote it and somebody else wrote it, not me. That is the indicator to make a string visible, $ SPX, comma, label like bounce, whatever, common number, comma, whatever the syntax is. It's actually not that hard. Oh, and coming soon to a Think or Swim near you. Is this it? No, where's Think or Swim? Coming soon to a Think or Swim near you. I've got somebody that's working on kind of taking my levels and converting Smash Lido's, whatever his name is, Smash's levels on ES into SPX numbers. This is still a work in progress, and being able to put it on TOS, and that too will be available to subscribers. So there's stuff coming. I never thought that I was going to be this guy, but apparently I'm this guy. Symantec. I haven't traded this thing in a while. Symantec falling. Moderna getting beat up for no reason, or maybe for a reason. Trump administration plans to pull COVID vaccine off the market within a month. Yikes, that's not good. See what a SPY chart looks like. I never trade SPY. That's not true. I trade SPY a lot. If I'm doing, like a month out or something, or even 2 weeks out, I'll use SPY for flies or for ratios. Especially for ratios, it's a lot of margin to like buy one, sell two SPX puts, let's say, or calls. But for SPY, it's economical enough to do by whatever 64, 60. Well, I don't even know the SPY numbers. Buy a 635 or 630 put for September 12th, and sell two whatever 600s or 590s, whatever it is. You have to play with the trade. Okay, I'm done. See you guys tomorrow. I may throw some stuff on Twitter or on Substack. I'll definitely throw some stuff in my subscriber chat, at least some random observations and some charts maybe. And that's it. Oh, and there was some research, and I've seen this before, different people talk about it, that you might see people out there saying that skew is expensive. And you might be saying, wait a minute, how is skew expensive? Skew meaning puts, downside protection, whatever. How is skew expensive when VIX is 15, whatever? And the answer is skew is relative to itself, the price of puts versus call. And so one of the ways to do it, I've seen a few people use it. Apparently, there was a paper by a guy named Mixon that got everybody started on this. Basically, you take the difference between the 25 delta put and call, divide that by at the money volatility, and you get a number. I think 0.15, whatever, means it's expensive. It's cheap, rather. 0.35 means it's expensive. And last time I looked, it was about 0.4 something. So that's why skew is expensive, and why we're scratching our heads selling puts with an IV of 15 and making money. When conventional wisdom, which is not very wise, says, oh, low IV, low VIX, you shouldn't sell puts. Well, VIX's 30-day forward calculation doesn't always have a lot to do with what you're doing with 0DTE scalping. It does a little bit. It does. I'm not saying it has nothing to do with it, but it gets a little more nuanced. And so that's something that I'll come out with one of my famous cheat sheets and one of my little PDF things, and that'll go in the resources for my subscribers who don't look at it. But then I pull it out on like an open mic and say, okay, we're gonna study this, guys. Let's go. And anyway, that's that. Okay, everybody, take care. I'm out.